On to some business now. The current dividend payouts by savings and credit societies are straining their sectors, eroding their financial health.
The Director of Co-operative Banking at the Co-operative Bank of Kenya, Vincent Marangu, says there is need to cap dividend payouts to increase capital retention and advance more credit to members.
The SACCOs capital retention rate stands at an average of 6% as some societies, struggle with capital.
September this year, the SACCO Society Regulatory Authority reported that saving and credit cooperative societies reduced their average dividend rate on share capital to 10.46% in 2024, the first time since 2021. The sector is planning to revise downwards or retain dividend payout at the current rates.
How much assets you can carry. So we are telling our SACCOs the retained earnings is not up to the international best practice standards. And the leaders have agreed that they will discuss, they will do more retention so that we not only build our institutional capital, but also our retained earnings so that our core capital is not just at the statutory threshold. We will be up, over and above.
Retain a certain percentage consistently from our dividends. If, for example, you are giving 12% dividends, can you engage your members to agree that you can pay 10% and retain 2% to strengthen your SACCO for the future? We are looking at 20, 15, 30 years to come. How are the SACCOs going to look like? Are we prepared to meet the future challenges?
The government is also pressing the sector to lower dividends payout in a bid to capitalize the sector and avoid erosion of the capital adequacy ratio. Co-operative Bank of Kenya Director of Banking Division, Vincent Marangu, says capping of dividends payouts will help capitalize the industry, increasing their capital base for on-one lending to customers.
When we look at our capital structures in the cooperative sector, we have the regulated SACCOs, almost for the deposit-taking SACCOs, for example, almost 167 out of 172 are meeting their minimum capital requirement. But the threshold of that capital growth and requirement over the statutory requirement is not very high. When you look at the internal capital adequacy threshold or achievement of a number of our regulated SACCOs, we are not up there.
Marangu is urging on SACCOs to consolidate their services to increase their working capital and enjoy economies of scale.
Be very vibrant in future. If the next 5 years we don't know what might happen, if we have challenges and shocks in our economy and you don't have adequate capital, then you will have challenge. If you don't have adequate capital, there will be a problem in terms of how much deposit you can take in, how much loans you can lend.
The government has also tipped to push for prompt payment of farmers' arrears to reduce non-performing loans in agriculture-based SACCOs. Benson Rioba reporting for Prime Edition.